Spain's decision to break ranks with the European Union on this critical issue is not just a tactical shift, it represents a strategic pivot. In many ways, Spain is positioning itself as a bridge between Europe and China, aware that its future prosperity is increasingly linked to the rising economic power of Beijing. By standing firm against the EU's proposed tariffs, Spain is sending a clear signal. It values its trade relationship with China more than the EU's unified stance. This isn't just a matter of economic convenience for Spain, it's a matter of survival. As the European Union struggles with internal divisions, Spain is aware that it can't afford to ignore the economic realities of the 21st century. In a world where China's influence continues to grow, Spain recognizes that aligning itself with Beijing could be essential to maintaining a competitive edge. This doesn't just concern the automotive or agricultural sectors, but extends into technology, energy, and beyond. For instance, China is increasingly investing in European technology and infrastructure projects. Spain, with its geographical location and strategic ports, stands to benefit from Chinese investments in sectors such as renewable energy and high-speed rail. This opens up new avenues for Spain to maintain its position as a key player in the European economy, while also enhancing its standing as a vital link between Europe and the rest of the world. However, this bold move comes with its own set of challenges. The potential backlash from EU member states could be significant. Some countries, particularly those with strong automotive industries like Germany and France, may feel that Spain's defection weakens the EU's collective bargaining power. This could lead to a rift within the Union, with other nations potentially reconsidering their positions on EU-China trade relations. If other EU members follow Spain's lead, it could create a fragmentation of policies and lead to increased competition between member states for Chinese investment. On the other hand, if Spain's gamble pays off, it could serve as a model for other EU countries facing similar trade dilemmas. The EU could find itself in a position where it must either adapt to Spain's vision or risk isolating itself from one of the most lucrative markets in the world. With China continuing to assert its dominance in global trade, the EU may have little choice but to reconsider its approach to Beijing and its economic leverage. Spain's agricultural sector is another area where the country may find itself walking a tightrope. A trade war with China could have serious consequences for Spain's farmers, especially in rural areas that depend on exports to China for survival. Pork is not the only agricultural export at risk. Spain also sells significant quantities of olive oil, wine, fruits, and vegetables to China. If these exports are hit by retaliatory tariffs, Spain could face a severe economic downturn in regions where agriculture is a major employer. China is one of the world's largest consumers of pork, and its growing middle class has developed a strong appetite for Spanish goods. Spain's pork exports alone are worth billions of euros each year, and a disruption in trade could affect not just farmers, but entire supply chains that depend on exports. Furthermore, as China continues to expand its influence in global food markets, other EU countries may find themselves in a similar position, forced to choose between EU solidarity and the economic benefits of trade with China. What Spain is doing is not just about protecting its own interests, it's about recalibrating Europe's position in the global economy. If the EU continues to take a hardline approach against China, it risks pushing itself into an isolationist corner, while Spain is attempting to ensure that Europe remains open to collaboration with one of the world's largest economies. But there's another layer to this. The political fallout from Spain's move could potentially affect domestic sentiment as well. Spaniards who rely on the automotive and agricultural industries might face more uncertainty in the short term as trade tensions with China intensify. The risk of job losses, higher production costs, and potential export bans could stir up frustration among voters, leading to political instability within the country itself. Prime Minister Sanchez's position could come under fire from critics who argue that he's sacrificing Europe's unity for the sake of short-term economic gain. Ultimately, this situation underscores the complexity of global trade today. In a world of interconnected economies, no country can afford to ignore the changing dynamics. Spain's decision to break from the EU's stance on Chinese tariffs is emblematic of the shifting alliances and priorities that define the modern geopolitical landscape. It reflects the reality that economic power is no longer concentrated in just one part of the world. Countries must now navigate a web of competing interests and dependencies if they are to thrive. Looking ahead, this move could trigger a broader rethink within the EU about how to approach the China question. Spain's rejection of the tariffs may prompt other nations to reevaluate their own positions. Could this be the start of a European redefinition of its relationship with China? Or will the Union rally around the idea of collective economic defense? Only time will tell. What is clear, however, is that Spain's bold move has set the stage for a high-stakes battle between economic necessity and political unity. If Spain succeeds in balancing these competing interests, it could emerge as a leader in redefining Europe's future with China, one where pragmatism and long-term strategic thinking take precedence over short-term political gains. China is known for not backing down under economic pressure. If the EU imposes tariffs on Chinese electric vehicles, Beijing is likely to retaliate by targeting key European industries. The question is, which sectors will be most affected? The answer is clear: luxury goods and technology. Europe's luxury brands, from LVMH to Hermès, heavily rely on China's affluent consumers. In 2023, Chinese shoppers accounted for nearly 30% of global luxury spending, according to Bain & Company. A backlash from China could force these companies to rethink their business strategies. In technology, Europe exports billions of euros worth of equipment to China every year. As China is the EU's second-largest trading partner, any disruption to this relationship could have severe consequences. China holds the power to cripple entire industries if it feels threatened. The EU's proposed tariffs on electric vehicles could ignite a trade war that Europe is ill-prepared to handle, as Elizabeth Bra, a senior fellow at the American Enterprise Institute, pointed out in a recent Wall Street Journal op-ed. Germany, with its strong automotive industry, has resisted the tariffs. Giants like Volkswagen, BMW, and Mercedes-Benz have major investments in China. In fact, Volkswagen sold over 3.5 million vehicles in China in 2023, which accounted for nearly 40% of its global sales. Losing access to China's market would be disastrous for Germany's economy. In contrast, France and Italy are less reliant on China for automotive exports and are more focused on protecting their domestic markets. French President Emmanuel Macron has been vocal about the need for tariffs, arguing that Europe must defend its workers from unfair competition. In a recent speech, Macron stated, "Europe must defend itself. We cannot allow our industries to be destroyed by Chinese subsidies." This divide between European nations is growing. Germany, with its strong economic ties to China, is reluctant to escalate tensions, while countries like France and Italy, which have been hurt most by Chinese competition, are pushing for stronger protections. Spain's decision to oppose the EU's tariff proposal reveals the widening rift within the Union. Each country is grappling with its own economic challenges, and a unified stance on China is becoming harder to maintain. Some nations, like Germany and Spain, prioritize economic ties with China, while others, like France and Italy, call for more protection against unfair competition. This split goes beyond trade. It's a political issue. Europe is at a crossroads, with some countries pushing for deeper integration and others advocating for a more flexible, nation-first approach. As The Economist recently reported, "The Great European Divide: How China is Driving a Wedge Between EU Members." This divide will shape the EU's future relationship with China for years to come. Now let's dive into the numbers, because the core of this story is trade. In 2023, China's trade surplus with the European Union reached a staggering 400 billion, an amount that can't be ignored. The imbalance stems from the fact that China exports more to Europe than it imports. While Europe buys goods like electronics, machinery, and electric vehicles, the Chinese market is not returning the favor to the same extent. This trade surplus is becoming a growing headache for European leaders, and it's not just about the numbers. It's about the leverage this gives China in negotiations. The more dependent Europe becomes on Chinese imports, the more power China has over European economies. Consider this: if Europe continues to rely on cheap Chinese goods, what happens if China decides to tighten the screws? It's a delicate balance, with Europe constantly on the defensive. Spain's decision to back away from the EU's tariff proposal highlights this issue. As the fourth largest economy in the Eurozone, Spain views China as an indispensable partner and is less concerned about the surplus than countries like France or Italy. Economists like Paul Donovan of UBS have warned that China holds far more leverage over Europe than many realize. If Europe doesn't act, China's economic influence could grow to a point where it puts Europe in a precarious position. The impact of trade tensions between the EU and China is already sending shockwaves across the global economy. From raw materials in Africa to tech manufacturing in Southeast Asia, the global chessboard is shifting. These tensions are also drawing in other global powers, especially the US, as the Biden administration seeks stronger alliances in its own trade battle with China. A fragmented EU could weaken the West's position against Beijing. As Europe and China clash, global supply chains are bracing for potential disruptions. This isn't just about trade. China is expanding its Belt and Road Initiative, drawing countries in Africa, South America, and Southeast Asia into its economic orbit. If Europe isolates itself, China could find new partners to fill the economic void. The global economy is shifting quickly, and Spain's decision may alter Europe's place in that new order. With every diplomatic move, the balance of power shifts a little more toward the east. So what does Spain want? Is this purely an economic calculation, or is there more at play? Spain is positioning itself as a bridge between Europe and the rest of the world. By rejecting the EU's tariff proposal, Spain is signaling that it wants to play a key role in navigating these turbulent waters. Spain's relationship with China is crucial. China is now Spain's third-largest trading partner, and in 2023, Spanish exports to China grew by over 15%, with machinery, agriculture, and pharmaceuticals leading the charge. But it's not just about trade, it's also about investment. Chinese companies have heavily invested in Spain, particularly in technology, infrastructure, and renewable energy. In fact, Chinese direct investment in Spain exceeded $5 billion in 2023 alone, a crucial boost for Spain's long-term economic development. The Spanish government has been vocal about its desire to mediate between the EU and China by taking a softer approach. By doing so, Spain hopes to position itself as a key player in shaping the EU's future policies. This is a strategic move that allows Spain to carve out its own role, balancing Europe's need for competition with the necessity of maintaining strong ties with China. It's a difficult position to navigate, but one that could define Spain's role within the EU for years to come. Spain's refusal to support the proposed tariffs isn't just a headline. It's a pivotal moment in the EU-China trade relationship. The upcoming vote on these tariffs could determine the future of Europe's trade policies. Spain's stance has already exposed divisions within the EU, with Germany, which has long been hesitant about the tariffs, potentially following Spain's lead. If the vote fails, it will signal to Beijing that Europe isn't as united as it claims to be on China. Politico reported that Spain's move has thrown the EU's plans into chaos, with key leaders scrambling to salvage the vote. If the EU fails to impose the tariffs, it could weaken Europe's negotiating position with China. But if the tariffs pass, Spain and other dissenting nations could face economic retaliation from Beijing. Spain's move is more than just a policy shift. It's a seismic change in the power dynamics between Europe and China. As trade tensions escalate, Spain is taking a calculated risk that could reshape its economy and Europe's future. Will Spain's decision spark new alliances or deepen cracks within the EU? Only time will tell. But one thing is certain, the world is watching. If you've enjoyed this video, we'd love for you to hit the like button and subscribe to our channel for more content. Your support is invaluable to us. Don't forget to share this video and check out another one from our channel, which is now on the screen.